Hi everybody, it's Terry Ryder from Hotspotting, and this is my regular weekly feature at this time, Hotspot of the Week. I'm going to be talking a little bit tonight about the Melbourne property market, and in particular one precinct within that market. Before I do, I want to bring you up to date with the latest statistics on price movements. One of the consequences of the series of fortunate events that have happened over the last month or so, starting with the end of the federal election, which was a big break on activity, and other things like we've now had 2 interest rate cuts since the election. We've also had an announcement by APRA relaxing its lending criteria, which are imposed on the major banks who lend for residential real estate, and the promise of impending tax cuts if the Parliament that started sitting today in Canberra can deliver them. One of the consequences of the improved sentiment that's out there in the market around the country has been evidence, early evidence, but nonetheless some compelling evidence that there's been an improvement in the trends with prices. What we've been seeing over the last, say, 1 to 2 months is that the rate of price decline in the major cities, particularly Sydney and Melbourne, which are the ones that have really been prominent in the so-called national property downturn, the rate of decline has started to slow, and then there were a couple of weeks where the weekly price indexes published by a couple of the research firms showed that there was no change, and then more recently we've started to see those indexes starting to nudge up again. And in the last day or so, we've had 2 of the major research sources, SQM Research and CoreLogic, publish their latest figures showing what they say happened with prices in the major cities in the month of June. Now, according to CoreLogic, the house price indexes in June rose in Sydney and in Melbourne and in Hobart. According to SQM Research, they agree, yes, their index also records price rises in June for Sydney, Melbourne and Hobart, but they also add Brisbane, Perth and Adelaide. Their figures are a little bit more optimistic than those from CoreLogic. And both those sources also record increases in median prices for apartments in many of the major capital cities. In the case of SQM Research, their overall result, their average result for the capital cities for June is a 0.4% increase in their price index for houses and a 0.8% increase in their price index for apartments. So not major increases, but the significance is that it's continuation of this trend we've seen where firstly the rate of price decline has slowed down, then it stopped, and now we're starting to see evidence of prices rising again in the major cities where they previously were falling. And of course, one of those places is Melbourne. The numbers for Melbourne generally have become quite encouraging. Vacancy rates are quite low. We're seeing evidence in Melbourne of rents rising, and now we're starting to see in the generalised data published by some of these major research sources increases in house and apartment prices. Now, that sort of builds on some of the more detailed research that we do at Hotspotting, because these research houses tend to publish very generalised figures, one figure to describe an entire large city like Melbourne, whereas we do it on a suburb by suburb basis. And what we found when we did this most recently was that about 40% of the markets across Melbourne actually had prices, median prices, higher than 12 months ago. So it certainly wasn't the case that all of Melbourne was down. 40% of the markets were actually still up. And when you looked at the suburbs that had substantial apartment markets, we found that almost 6 out of 10 of those suburbs, median prices for apartments were actually up. They were higher than they were 12 months ago. So there's still evidence of growth happening in Melbourne. It's just that the generalised figures for the market overall were very much in the negative. And that was probably because the part of the Melbourne market that's been down the most is the absolute top end, the suburbs like Toorak and Hawthorn and Canterbury, where there's been quite large decreases over the last 12 months in their median prices, and that's dragging down the average. But now we're starting to see the indexes, those generalised indexes for cities like Melbourne, starting to nudge up again. So it's against that more positive background that we have with wonderful timing, published our new edition of the Top 5 Melbourne Hotspots report. Now, in this report, we've tried to focus on areas that we think basically have good, solid credentials that have been resilient in the face of the general downturn, and which we think long-term have good prospects for growth. And tonight I just want to focus briefly on one of those locations, and that's the local government area of Moreland. That's a little bit north of it's an inner city to middle ring area north of the Melbourne CBD, includes suburbs such as Brunswick, Coburg, Pascoe Vale, Glenroy, those sorts of places, north of the Melbourne CBD. Lots of suburbs with really good credentials. In terms of the apartment market, relatively affordable. Key factors being good transport links and proximity to the CBD, and in particular their proximity to the major education and employment hub around Parkville, Carlton. Well served by metro train lines, close to both the city's major airports. But I think probably the biggest factor that drives, one of the biggest factors anyway, driving demand in that market is proximity to that amazing medical educational hub around Parkville, which engages every day tens of thousands of people as medical professionals, nurses, students, lecturers, teachers, etc. There's well over 100,000 students attending the University of Melbourne and the RMIT University. So that market is underpinned by an economy based around all of that. It's buy demand in those areas have shown quite good resilience in the face of the general Melbourne downturn. We chart sales activity, not just prices, quarter by quarter. And Melbourne generally, most areas of Melbourne has been quite a sharp decline in the number of sales that have been happening quarter by quarter over the last, say, 18 months. But this area, the suburbs, have shown quite strong resilience against that trend. They're down a little, but holding up pretty well. So the Melbourne Biomedical Precinct, made up of over 40 hospitals, medical research institutes, biotechnology organisations, universities. Big part of what makes that general area pump, its proximity to that and links to that. As I mentioned earlier, the Royal Children's Hospital, the Royal Women's Hospital, 3 smaller private hospitals. Now, against that background, the property market is actually showing really good resilience. The first thing that stands out for me when I look at all the numbers for the suburbs of this precinct of Moreland is that vacancies are very low. We've got figures here for 2, 4, 6, 8 postcodes, which are spread across this local government area, and all of them except one have vacancy rates of 1.5% or lower, somewhere between 1% and 1.5%. The only exception is a postcode where the vacancy rate is 2%, which is still quite low. That's the first thing that stands out. The second thing that stands out is that median prices for apartments in the suburbs that have substantial apartment markets, and they include Brunswick, Brunswick East, Brunswick West, Glenroy, Pascoe Vale, etc. The vast majority of the suburbs in this precinct, the median apartment prices are actually up in annual terms against the trend of general decline in Melbourne over the last 12 months or more. So, for example, the median price for Brunswick for apartments is up 4%. In Oak Park, it's up 6%. Pascoe Vale's up 8%. And Hadfield, a smaller apartment market, but its median apartment price has risen 12% in the last 12 months. And that's completely contrary to that general trend we keep hearing about in the general media. That's the problem with the way media reports markets and prices. They just produce a single figure for an entire large city. They generalize, and they completely overlook these exceptions to the rule, which people would really quite usefully want to know about. And as I said earlier, our research suburb by suburb shows that most apartment markets in Melbourne actually have prices higher than 12 months ago against that trend in the housing market. And this precinct illustrates it really well. We've got on our list in our report on the Moreton local government area, which you can get on the Hotspotting website, We've got 2, 4, 6, 8, 10, 11 suburbs listed that have substantial apartment markets, and only one of them has had a very small decline in its median price. The others have all got median prices up in the last 12 months, including some that are up quite a bit. Hadfield's up 12%, Pascoe Vale's up 8%. Now the housing market, certainly all the suburbs in this precinct have median prices that are down in 12 months term, and that's one of those interesting contrasts in the Melbourne market at the moment, that the apartment markets are holding up a lot better and are actually still rising in terms of the median prices compared to the housing markets in the same suburbs. But the price decline in the suburbs of this precinct has been relatively muted, because what we're hearing in mainstream media, that Melbourne house prices, generally speaking, are down 10, 11, 12%, depending on whose figures you believe, whereas the suburbs of this precinct are down, well, Fawkner's down just 1%, Coburg North and Glenroy just down 3%, and you've got others that are down 4 or 5 or 6%. That's pretty much the norm for this precinct. There's a few that are more, but most of them have had a price decline that's relatively minor in the face of the general downturn in the Melbourne housing market. So it's a very solid precinct. It's one of the reasons we're attracted to it and why we've given it prominence in the new edition that we've just published of the Top 5 Melbourne Hotspots report. It's very solid. It's got lots of great credentials. It's relatively affordable. It's got good links to the CBD and to this big education and employment precinct, this hub of learning and medical services and jobs. And this market is showing great resilience, and there's some parts of it that are showing growth, and we expect that long term it's going to be a growth market, and that's why we've included it, the Moreland local government area, including suburbs like Coburg, Brunswick, Pascoe Vale and Glenroy. That's why we've given it prominence in our new Top 5 Melbourne Hotspots report. So recommend that you get yourself a copy and have a read of it. If you're interested in buying in the Melbourne market for whatever reason, this report can help you discover those areas which we think that long term are going to show good growth and be solid performers in Melbourne. Against a background where the price data published this week from 2 major and respected research sources show that overall Melbourne prices stopped falling and have started to nudge upwards again, as has been predicted by many analysts. So that's it for now. This has been my weekly feature hotspot of the week. We'll do it again same time next week, Tuesday evening. Talk to you again then. Look forward to it.